Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Cowley. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Cowley, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Cowley.
Welcome to another edition of Premium Cashflow Podcast. Today, I have the pleasure of welcoming Glen with NuView IRA. Welcome to the show, Glen. I appreciate it. You're taking time today.
Oh, you're welcome, Sakar. I can't wait to spend some time with you.
Awesome. It is a pleasure when, experienced guests like you come on sharing their niche knowledge. A little bit about your background, Glen. You are the founder and president with NuView IRA. You have been leader in the space since 2003. In 2018, your company established NuView Trust, which gives you a lot more, sort of the regulatory compliance mechanisms as well. And now you're expanding into growing businesses with helping folks with self-directed IRAs and into new services to further reduce or eliminate their taxes. Your clients invest in real estate notes, private placements, precious metals, various entities, and a multitude of other assets with the sole aim of growing and preserving, if any of the taxes that can be reduced. You have been working in various finance positions, holding strategic directions and things like that. You have guided various individuals and businesses to invest their tax advantage funds into a lot more non-traditional markets. Wow, your message has resonated with a lot more folks with over 1.4 billion of assets directed into your NuView Trust platform. So as everyone knows, you are a national sought-out speaker. Many of us have listened to your various podcasts. So we are obviously here to learn about how we can reduce taxes, use of self-directed IRAs through various mechanisms, and how we can, sort of reduce your taxes to kind of, grow more of your wealth. So thank you for coming on, Glen. I appreciate your time. In your own words, give us a brief background, and we can dig into the details of our subject today.
Well, I don't want to talk too much about me, but I kind of want to share with you how I became interested in self-directed IRAs.
Sure.
I started out working 13 years at a little company on the West Coast called Lockheed Missiles and Space Company.
Wow.
Actually, quite a big company.
Sure, it is a big one.
And I remember back in 1980, I joined that firm, and they routed me to the HR department. They said, "Would you like to put money in a 401k?" And I didn't realize at the time, 401ks at that time were only 5 years old. Mm-hmm. So the employer plans haven't been around that long, about 25 years.
Sure.
And so I said, sure. I said, I'll put 2% of what I earn. And I made the deal that I would, anytime I got a bonus or anytime I got a raise, I'd put 50% in my retirement plan. Mm-hmm. And this is, by the way, this is the easiest way to say, because it's a future promise. Sure. So it's not like dumping a lot of money today, but it's like, when things are better, I'm going to do this.
Right.
And 13 years later, I left Lockheed with over $130,000. That was back in 1993. And I got to tell you, completely painless.
Sure.
So payroll deduction works because not only you don't get to see the money and spend it, more importantly, your spouse doesn't. So
right.
that's actually a big bonus. So I rolled it over, which you can do when you leave your employer, and I rolled it over to Charles Schwab. I love Charles Schwab because I could buy and sell any stock possible.
Sure.
And I was a strategy consultant at that time in the cellular business, which was just taking off in 1993. And so I knew a bit about all the different companies that were publicly traded in some new places like Nextel and some of those new players in that world.
Sure.
And I realized that when I was buying and selling stock in what I thought I knew, I lost money even quicker than I did in the employer plan that only let me choose from 3 or 4 things.
Sure.
And it dawned on me that Wall Street wasn't a game I was going to win long term. There's too many people in between you and your money,
sure.
taking a piece of it. So I had read somewhere when I was working as a strategy consultant, I had read a magazine article about the fact that you could actually use your IRA and invest in real estate. And I felt like real estate was a place I had a chance. And the reason for that is you can always sort of, if you look around, you can be first in line.
Sure.
Everywhere else, you're just in a long line.
Couldn't agree more.
And that's what I really enjoy. And so I found a bank in Chicago that would let me do this because the company founder had a relationship. I wasn't a high net worth individual, but when I got introduced to this, 30 days later, I owned my first piece of real estate. Cost me $2,000 to buy it. That's what the trust department charged me at the bank. And when people go, "Ooh, that's a lot of money," I was thinking the opposite. "Ooh, that's a lot of power. That's a lot of freedom. That's a lot of opportunity."
Absolutely.
And I never look at like how much things cost. I look at what am I buying? What opportunity am I buying? Because what matters is what happens at the end.
Sure.
And so that was about 22 years ago. And I ended up buying a piece of property, a raw land in Charleston, South Carolina. It's not so much what I invested in, but it was unlocking that knowledge. And the fact is that's how America saves. We save in 401ks, 403bs, 457, thrift savings plan. These are all different subsections of the code that allow for nonprofits, for government sector employees, et cetera, to save in. And they all work the same way, basically. You put money in, your employer may or may not match it, right?
Right.
Generally speaking, it's pre-tax, means you get a tax benefit.
Sure.
It grows, and then when you exit the company, you can roll it over. And I'm really being very brief on this, I understand. But to take a look at how much money is in IRAs, it's insane right now because it's been higher than ever before. And it's not because necessarily people are investing more, it's they're getting older. So they're leaving. And when you have a market disruption like we had in 06 or 07, and we have now, and by the way, there's a huge opportunity right now that I'll talk about later.
Sure.
That's how IRAs get funded. They don't get funded so much by the $6,000 a year you can put in one. It's generally from employer plans and rolling that over. And so my experience that I did is sort of what a lot of our clients do. And I'll share this with you, and then I'll give you a chance to ask me a question. I've been talking way too long.
No, you're fine.
When my new employees come in, what's really fun, we've been growing a lot. And as our new employees come in, I spend 1 hour with them on the first day they join us. And so everybody is in our company needs to understand all about IRAs. So it's very unusual. Our receptionist probably knows more about IRAs than most CPAs do. But I remember I have this conversation. I said, well, you know what an elevator speech is, right? We've heard about that term. And what it basically says is, if you're going to tell somebody about your company, you got a short period of time, but you got a captive audience, right? That's an elevator ride. I don't know how many floors you're going up, so I better be quick. And you're a virtual stranger. So what do we say about a self-directed IRA if we meet somebody and that people had, and I struggle with this. I said, well, you can buy real estate notes, mortgages, tax liens. It gets to be a speech. It gets to be a monologue. There's no engagement. So I finally decided this is what I say. I say, they ask me what I do, and I can engineer the conversation well enough because I ask them what they do, and they'll usually reciprocate. And I said this, we let our clients invest their IRA in thousands of ways they never thought possible. And that's really what we do. We provide the platform. So that very joy that I got when I did my first deal, you can certainly do that in our clients. And that joy comes, I see it in our clients' faces all the time, but they can do so many more things. Even in real estate, so many things that you can do that's legal, but no one ever tells you that, because it's never in any vested interest for Wall Street to tell you, hey, you can exit that ramp and start doing this yourself.
Sure. And I can personally attest to that, Glenn, as you stated that, all the corporate umbrella that's there, is designed to keep the money in-house and let, all their employees invest pretty much in-house into the plans or options that are available with them. I think the moment someone is kind of going in this self-directed IRA route, it's a independent, educated decision that you're making for yourself, saying that, hey, I'm going to own this. I have studied the de facto way how I want to kind of invest my money, whether it's, let's say the real estate, the precious metal, or some other businesses and things like that. So you're kind of owning, and you have that confidence that, hey, I want to go this route. I do not want to go the kind of the traditional Wall Street route, right? So
Well, I think it's true, but if I can interrupt,
sure.
Nobody starts with confidence, right?
Right,
We have
right.
to build it. And I think the very fact that they're listening and watching you today is the fact that people are on that journey.
Sure.
And some people arrive after 2 or 3 weeks, they go, I'm in, I get it.
Right.
Those are the early adopters. The rest of us, it may take a little bit more time. So this is part of that whole process.
Sure, absolutely. So now let's talk about the details now here, Glenn. Is that how can we set this up, or what are some of the accounts that are kind of eligible for conversion to a self-directed model? Could you maybe kind of delve into some of those details?
Yeah. So any of the 4 types of IRAs, and most everybody understands the traditional.
Sure.
The traditional is the one that's been around the longest, since 1974. And it basically means that in most cases, not all, but in most cases, your contribution's deductible. So in other words, you get to start without paying taxes.
Mm-hmm.
And then throughout your lifetime of investing, you pay no taxes. It keeps building up.
Sure.
But at age 72, and by the way, that's changed. It used to be 70 and a half, but at the age 72, they start making you take minimum distributions.
Sure.
And the reason for that is you've never paid taxes, and sooner or later, the government's going to be anxious for you to pay taxes. So that's what you do. Right. And that works the same also for a SEP IRA, which is made for independent workers that aren't W-2 workers. They're 1099 workers generally.
Sure.
And also for a simple IRA, which is sort of a mixture or an amalgam of traditional IRAs and 401ks, and it has its own unique plan.
Sure.
All of those things are all pre-tax and basically forestall making any kind of tax payments until you start taking it out to live on.
Sure,
I mean, retirement's really not to benefit you now, it's to benefit you later. And so all 4 types of IRAs. You can also do this with your health savings account, which is amazingly cool, because you can put up to about $7,000 a year in it for your family plan. Mm-hmm. And you have to be covered by a high deductible healthcare plan. And if you have a family plan, like I do, mm-hmm. I can actually put more money in that than I can in my IRA. The HSAs are all pre-tax, which is really, really cool. Mm-hmm. But if you ever take the money out for qualified medical expenses, no mm-hmm. tax. You get to use it. You get to build it all up. And if you never use it, who cares? You can take it out after age 65 with no penalty. Just pay mm-hmm. ordinary income tax, the same mm-hmm. as you would with a traditional IRA.
Sure.
So it's sort of like an IRA with extra benefits. There's mm-hmm. ways to get money out. That is really, really cool. And what people don't understand, they go, well, that's not a lot of money. I didn't build up. I may have built up $300,000 while I worked at Lockheed, but my health savings account, I didn't put that money away for 20 years. Mm-hmm. That was only in the last Bush administration that you could do that. So maybe I have 60,000. So what do I do with 300 in one account, 60 in another? You know what you do on that, Sekar? Mm-hmm. Your partner. So you can have one investment mm-hmm. that's owned 20% by your HSA, mm-hmm. 80% by your IRA, and you partner. So it's really fun because you can actually make all these tax deferred accounts mm-hmm. Work on one investment. You can also put it in a Coverdale, which is an account for your children. That's post-tax, but it grows without taxes. And mm-hmm. if you use it for qualified educational expenses, there's no additional taxes when it comes out. So I can actually have one investment and have 3 of my accounts all invested in one. Kind of
interesting. Cool. It is cool. Now, talking about different, sort of the asset types and things like that, Glenn, how can we go about investing it? Like, are there any sort of limitations or any guidance about how we should go about it? Meaning, let's say if someone is interested in multiple asset classes, like let's say the precious metal, the real estate, or some other businesses and things like that, how can we kind of channelize that into it? Like, meaning, do we need a custodian, or is it as independent as perhaps we can maybe discuss like the checkbook IRAs we keep talking about sometimes, that word keeps coming up. So if you could, maybe distill some of that detail down, that'd be great.
Well, you gave me about 12 questions. So while I have the capacity of answering all of them, I may not have the capacity to remember all of them, but I'm going to do my best.
Sure.
Okay. Sure. Keep in mind, I look at this when you're on a self-directed platform with a custodian that has a trust company, as we do.
Sure.
Is, as I said in my earlier elevator speech, as long you can invest in anything the IRS does not prohibit. So the prohibitions are small. So I'll talk to those. And when you asked earlier, the trigger point was, what's the most important thing? What's the most important thing? Here's what I think the most important thing is: whether you're going to make money or not from the investment. It doesn't matter what platform you're on if you're going to get bad returns or low returns. True. So I would answer that question first. If multifamily is going to deliver to you the type of returns and the type of safety that you're looking for, then ask the question, can I hold it in an IRA? Because there's so many things that you can hold in an IRA. And the answer to that is, of course, you can hold that in an IRA. Here's what you're not allowed to hold: real estate. And the reason for that, it's logical. Your IRA and all the tax benefits of an IRA are meant to protect your retirement, not to help your beneficiary. Right? Sure. So therefore, it can't be held. And that was when that law was drafted back in 1974. That's in the code. It's section 4975. For those of you that like to really go up, section 4975 of the code talks about prohibited transactions and disqualified parties. The second part of that is the disqualified parties. And I want you to get an understanding of this sort of at 20,000 feet, because once you get that understanding, you go, oh, that makes sense why you can't do that.
Sure.
The IRS wants an arm's length transaction on everything you do. So no inside traders, right? Sure. And they view that those kind of people that you don't deal with first are certain family members. So the trunk of the family tree. So my IRA cannot transact in any way or have any relationship with my parents or grandparents, my kids or my grandkids, and their spouses. Okay. It doesn't mention other family members. I'll just tell you, don't do it. I mean, not because you should be scared, but just don't do it. Because then you could get into the trouble of, was it really arm's length? If I'm buying something from my brother's not a disqualified party in the code, but if the IRS is poking around, they're going to say, well, it looks like you bought this piece of property, your brother owned it 50% off. Maybe it was an engineered swap where he owed you some other money and you got it through your IRA. You made your IRA nice and fat with this, with a low cost. We don't know. So it's better to avoid that.
Sure.
So the other thing is that your IRA cannot benefit you as far as currently. It benefits you. You're going to use the money to retire. But right now, when it's sitting in that asset, it's not to benefit you, nor are you to benefit your IRA. So I'm going to make a real simple example. Well, how would you benefit your IRA? Well, you would benefit your IRA if you bought a piece of real estate and you went in and rehabbed it yourself. So you say, I'm not paying any contractor to do this. I'm much better. I'd rather do it myself. In essence, you're giving an illegal contribution to your IRA. Does that make sense?
It does make sense, meaning on one hand, you stated that you're not using personally all the proceeds or anything like that, or perhaps, I mean, that's like the self-dealing aspect of it, if that's the word. And then perhaps you're not taking the direct benefit from it personally as such, whether that's like working or the sweat equity that you're doing by yourself, and perhaps there's probably some liability and exposure matters as well. I think that can come up. So it's strictly meant to be kind of a hands-off, as much passive as possible, if that makes sense, Glenn.
Well, it absolutely makes sense. But the beautiful thing, you're right, it's hands-off, but it's brains on.
Sure.
Because you can think your way through all of these things. So if I want to do my kitchen, I mean, there's so many ways you can go with this. I can joint venture with someone, and I'm going to buy a piece of property, and maybe I'm the guy that has money and you're the guy that has carpentry skill. Sure. I can partner on that deal, and you have lots of skill but no capital. I have the capital and I have no time.
Sure.
So we can partner on a deal and have you fix up, and that goes into the deal. My money goes into the deal. And when we sell it, we split the profits 50-50.
Right.
It's simple as that. I am shocked that not as many people do that, these joint ventures, because we all come with different levels of expertise and different levels of money. So yes. So,
and actually, to your point, Glenn, there's a lot of private lending that happens through IRAs, and I have personally seen that. Like in our single-family space, we have heard of so many stories where someone's dad is investing into notes or some other forms of lending through their IRA, and that's like a minimum 16 to 18% return at that point, which is extremely backed by first deed of trust on your real estate and things like that. So it is very safe, high return, tried and tested for sure.
A lot of people love the lending side because it's a way to participate in real estate without tenants, right?
Sure.
So you have your own issues. People may not pay, right? You need to have a servicing company. Never try to, you can do this yourself, but you don't want to do it for the amount of fees. And you can go as long with those loans. So you can have them 5-year, you can have them adjustable. You can have them a first deed of trust, but you could also have the pink slip to their boat.
Sure.
So it's not like just one thing. It's so creative on all the things that you do. And when you talk to these people, that's even more advanced for these people that buy and sell existing notes,
right.
That they buy them at discounts, and some of them buy like the first 5 years of payments and then the back 5. So it can get pretty interesting, or it can be just as simple as you need money and you and I meet at a coffee shop. We sketch at a napkin what I'm willing to lend my IRA to you for.
Sure.
We'll just throw it to an attorney, say draft a note, and then it's done. It's just so quick. So the power that you have to negotiate with the IRA holder, or if you're the IRA holder with the borrower, it's completely up to you.
Sure. And I guess, again, I think the guiding principle is also, it's always for the benefit of your IRA. Nothing comes to you directly. We just want to, I think, reiterate that. And I think you were going with that other things where I think I mentioned the checkbook control or the checkbook IRA that gets tossed around. Could you maybe share some thoughts on, what that is, or, how does that come into play into this space?
Yeah, it's kind of like checkbook control is kind of like self-directed. What does that mean? It's kind of an industry term. Generally speaking, when you have a custodian, that custodian's job is to keep your money tax deferred until you take a distribution. Understand?
Right. Sure.
Subject to the behavior of the individual, right? So they got to behave themselves. But while I've got that money, I want to make sure it's not being taxed. So there's a role. We do all the paperwork, we do all the accounting, all of that for your account. Let's say that you're doing a lot of smaller activity, but lots of it. And we see people that they will lend out anywhere from $20,000 to $40,000 at a time. You say, well, that's pretty low, right? Well, but we might be lending out to rehabbers, that already own the house, but they need the money for all the equipment, the parts, the labor to fix it up.
Sure.
So they do series of these. The challenge is if you're gonna be with a custodian, the way all custodians charge the fee, it's per asset, right? So if you have lots of small assets, you say, well, there might be a better way, or you need the money quickly. So what about if I was to tell you there's a way to do this, Sakar, with by creating your own checkbook control LLC? And there's many of our clients that do that. It doesn't make sense to do it. It adds another element of cost because you're going to have to pay the state the filing fees in addition to the annual fees of maintaining that, correct?
Sure.
That LLC.
Absolutely.
But what it does buy you is it buys you the flexibility of being able to move quicker. I think that's probably it. So if you're in that situation, absolutely, we can teach people how to do that. We have we have a download that we can provide to you to do it. And a lot of people love that control. But it's kind of like giving a gun into the wrong hands. You don't want people to do it that can't keep good records.
Sure.
Because it's absolutely their commitment. They're doing a lot of the things that we would normally do as custodian. So they just got to make sure to keep good records.
Sure. So it's safe to say that I think a lot of power can suddenly come and kind of just go unaccounted, meaning in tangible terms, you could perhaps end up funding an entity a large sum of money on behalf of their IRA. But then if there is no good record keeping, or there are no detailed log of transactions and things like that, that might quickly spiral out of control. So I think a firm like yours that acts as a custodian and as a sort of a checkpoint between various transactions, you in some sense are keeping sort of your customers into compliance, which perhaps can go sort of unchecked when someone has a blanket checkbook control. Is that kind of what you're getting at, Glen, there?
Well, it does. I mean, our clients still, it's their obligation not to engage in a prohibited transaction.
Sure.
It was basically violating those terms of buying something they shouldn't, or dealing with a family member, or getting a benefit from it. So
sure.
I don't know if you're going to plan on staying in your IRA owned house as part of your vacation, which you're not allowed to do.
Sure.
I don't monitor that. I don't determine that. Right. So I really wouldn't know. So even if you're doing that directly with us or doing it through an LLC, the LLC completely hides any of that behavior.
Sure.
Because we're not processing the paperwork. In that situation, the only asset that's on our platform is the LLC. All the contents are really up to the manager of that LLC. The LLC itself is still owned by NuView as custodian for the client.
Sure. Now, speaking of sort of the process, the paperwork that comes with all of this, like how can someone get started, Glen? That I think let's say if I make the decision today that yes, I want to take control of my IRA and kind of have a self-directed IRA, and I want to kind of start exploring into, let's say, the real estate or the Bitcoin or any other precious metals and things like that. What are some of the ways to get the process started? Like how can someone start with, let's say, your company, for example?
Well, I always like people to be informed. And the nice thing is you can start with a small amount. So you don't have to stop doing anything. If you enjoy the stock market, have at it, and continue on. But if you want to start peeling off and saying, I like something that generates cash. Now, generally speaking, when you talk to somebody that has a different color hair than yours, like mine, right? Guys like me like cash flow. We really like cash flow because we don't have time to build up equity 20 years and stuff. And and so maybe it makes sense for you. The stock market has really got a hard time right now with cash flow, right? All interest rates are off the table, right?
Sure.
I've got with the 10-year treasury hovering around like 0.8.
Right.
You're not going to make any money with cash. So I want cash. So that might mean that draws me immediately into lending, real estate backed probably, or directly into real estate, because I can own real estate, make money, so that as I step out of regular work, W-2 work, and into the promise of retirement, my income doesn't go down.
Sure.
And so I think that a nice thing to do is to move over a portion. You don't have to do it all. Do it all. I mean, you're not going to go back. I mean, the beautiful thing of self-direction, you're not going to go back to, quote, the safety and security of Wall Street, because we know what that looks like.
Sure.
Just so you understand, is when we hit this virus and we started to, it went from a rumor in January to some concern in February and sheer panic in March, right?
Absolutely.
You saw what the market did.
Absolutely, yeah.
My rentals didn't get affected at all. They still paid me every month. And when I'm 80 years old, I want to be in something that pays me every month, because I'm going to want to eat, and I'm going to want to eat and live well. So I'm going to do that. So that's all it takes. And opening an account takes about 15 minutes over the phone. You can do it yourself, or you can do it with us over the phone. And we'll talk to you about what kind of account makes sense for you. What are your goals? And you may not know your goals. but to have some money there allows you to act. If
Sure.
you don't have money in, it's going to take at least 7 days to get it there and go through a right of rescission. The IRS says when you set up a new account, you have 7 days to change your mind.
Sure.
Well, that means we can't fund any investment for 7 days because I can't have you buy a piece of real estate and then try to resell it or rescind it. I can't do that.
Sure.
So having that as a tool in your tool chest, that costs you $50, by the way. That power of accessing your IRA costs you $50 to get started. And that's pretty cool.
Sure.
So having that as a tool, as people listen to you, even though they're not quite convinced, like I said, it's a journey. The fact that you're part of NuView and you're part of our community allows you to hear people like yourself.
Sure.
Because we will be also doing something with you and putting that on our website.
Sure.
So people can meet with you. So I think a lot of times we tell, do you have any children, by the way?
I do. 2 boys.
So do you ever talk to your children about who you hang around, you're going to become?
Sure.
Right. And when you hang around people that self-direct and are really interested in investments, it's like a passion, a very healthy passion that you start to get more and more interested in. Because the Wall Street doesn't want you to understand what they're doing. They have experts, right, that are studied and I don't have to be that much of an expert. I kind of understand what my advantages are in self-direction. And that's why I like to be there.
Sure. And Glen, now kind of at a high level, right? Since you own such a big company, you have seen several funds coming through your company and stuff like that. Would you be able to maybe distill it down, the percentages of, perhaps allocations that whether, your large part of your customers, like, let's say the real estate or perhaps alternative assets, like, I don't know, precious metals or oil and things like that, or some other things as far as Bitcoins or any other businesses. Would you maybe perhaps share some light on like a high level breakdown of what sort of are the tendencies of your customers within your portfolio?
Yeah, I'll be glad to kind of tell you what they're buying and holding. What I don't know is all their IRAs, because I don't have all of them. They might be at Schwab. So I don't know if I have 100% of them or not. I know I don't, but I will tell you, real estate makes up about 55% of all of our clients, but that includes single family homes. It includes multifamily homes, and it includes real estate syndications.
Sure.
So it's that whole wide thing. And I think the reason why that is it tends to be higher priced stuff. And that higher priced stuff means I need more money. So where do I have money? I got more money, and US has way more money in their 401k plans than they do in their bank accounts.
Agreed.
So they say, it was me. I mean, that's my story, right?
Sure.
And so that's where they go. If they have an interest, they go there and they move it over. So I think that's natural.
Sure.
As you progress in this, you'll learn other things that you can buy that are extremely interesting, maybe as a secondary thing.
Sure.
So you mentioned debt, and you said 16, 18%, and that's crazy. That I can get 16 to 18% when banks are lending money at 3% and 4%. How can that be? Well, they're not lending to the kind of people that you're lending to, and they're way too slow for those kind of people. And so there's an appetite and a need for hard money. That's called hard money when it's really asset-based.
Sure.
Then there is that the banks don't want that risk. They say, you can go ahead and do it.
Sure.
There's things as esoteric and as out there as structured settlements, whereby you can actually buy a lawsuit. You can buy a lawsuit before it's even adjudicated, but generally you buy it after it's adjudicated, so that if someone does a slip and fall at Walmart, and the lawyers figure out what that's worth. Maybe it's worth $6,000 over 2 years. There's companies that actually will sell those. So most people that, let's just say, I'm sure there's some people that legitimately slip and fall at Walmart, but I don't think everybody. They may be in it for the money. Those people want the money, all the money right now, for whatever reason. So they're willing to sell it to a company, which in turn will sell it to my IRA. So I can get cash flow from that. So that's something that our clients do, but you wouldn't do that first. You do that after you got the real estate, and after you have, and say, whoa, this is kind of interesting. let's put some money in that too.
Sure, sure. And you bring up a great point there, Glenn, is that I have been associated with a litigation fund, which is similar to what you're stating, where, these funds are buying sort of literally cases from the courthouse that have early promise of some big payouts at a later date. So the idea would be is that you look at a case and you study it in its in its infancy and say that, hey, this is perhaps a large late payment situation, late payment litigation, right? So they tend to have a lot more large payouts, or sometimes you have divorce settlements and things like that. These cases, as you know, they draw out for a long time, and there are litigation funds who will purchase this in its inception. It's kind of like for lack of a better term, it's like angel investing or seed money, except it is targeted towards, sort of the litigation, which has a sort of a much higher payout on the back end. And we have seen returns of well over 20 to 25% in some cases. And this is the kind of stuff that doesn't get talked about. And if you're knowledgeable enough and you have some connections, you can certainly get started in some of these very niche spaces that rarely gets talked about. Would you agree?
Yeah, I mean, they're kind of fun to talk about. Not a lot of clients do it.
Sure.
But I think they stand as a good surrogate for all the things that we haven't talked about.
Sure.
That you can do. I do want to share one thing, because I know our time is getting short.
Sure.
Something just happened with the coronavirus, and there was legislation that was created. It was called the CARES Act, and it had a lot of loan provisions, but there's not very often that rules change inside IRAs. And by the way, what they've done in that act has never been done in the 25 years of self-directed IRAs.
Sure.
Ever. The biggest problem you have, and we talk to people all the time about self-direction, and they get really excited. They go back to their employer and say, I'd like to roll over $100,000 over to NuView because I want to go buy a note, or I want to buy a piece of real estate, or I want to partner. Their employer almost invariably says, no, you can't.
Right.
The rules. The 401k is not meant for you to go have fun somewhere else. You have to be in our plan. You're limited to what we allow you to do. And you said you said that so well. Don't forget, it's not the employers that set these up. It's Wall Street that sets them up, sells them to the employers, create these rules around them to satisfy who? Not the employers, not the employees, but Wall Street.
Self-gratification. Yep.
So it's very frustrating for individuals that hear our message and want to go do it. It's their money and it's trapped.
Right.
Well, here's what happened with the CARES Act. And this is amazing. So the CARES Act was basically saying, hey, people are hurting. They may have money there in the 401k. If they take it out early, if they're allowed to take it out at all, because a lot of times the employer can actually say, no, you can't have it until you quit work here.
Sure.
Well, now the employers are allowed to elect themselves into this plan, whereby the employees, simply by saying, hey, I've been affected by the coronavirus, you have to check a box, right?
Sure.
The employer will allow up to $100,000 to go to you directly.
Wow.
Now, if it goes to someone like yourself, you're probably too young to get it. So you're going to pay a 10% penalty, and you're going to pay ordinary income tax.
I see.
Right? So that's a lot of money. So all of a sudden, that $100,000 you would be taking out, it's going to be $90,000. And then if you're in the 30% bracket, it's going to be $60,000. You see what it's done?
Yep, absolutely.
So the government says, hey, it gets better than that. Not only can you take it out without penalty, we're going to take the tax hit, and we're going to let you spread it over 3 years.
I see.
So you would actually $33,000 would be added to your returns in 2020, 2021, and 2022. Does that make sense?
Makes sense.
And they're going to do that automatically unless you tell them something different.
Sure.
And even better than that is if you take it out and change your mind and put it back in before the end of 3 years, all of those taxes will be repaid to you.
Oh, wow. So it's as if like pretty much more or less free money unless you return it within 3 years. No penalties. no tax consequences, basically.
Now, you'll have already paid a third of the tax, but don't sweat it. You'll get it back.
Sure,
so in other words, they will just refund whatever you've already paid.
Right.
So when I read this, I go, that's cool. I mean, that's really, really cool, except one thing. I don't like my money out of the best vehicle it can be in, which is tax deferred. Mm-hmm. So although I'm really excited about getting my money on that, or getting my hands on that money, I'm going to invest it. It's not to spend, even though you can, don't spend it. Right. So I'm saying, how can I use this? And I go, wow, this is what you do. Take the distribution, talk to your employer, right? Keep working there. You don't want to change your job right now, especially right now. Mm-hmm. Take the $100,000 out, put it in your bank account, right? Mm-hmm. The next day, pick up the phone or go to our website, open up a self-directed IRA with NuView, all right? Just put it in a traditional. It could be a Roth, because a Roth IRA, I haven't even talked about that. I got to come back and talk to your people about Roths, because that's
a whole
incredible.
No, I totally agree with you. The subject matter is so detailed enough that we definitely warrant a second discussion over this for sure.
So now because of this, by the way, the end of this opportunity is December the 30th of 2020. So you have some time. So you open up the account the next day, and you simply write us a check and let us know that it's an indirect rollover. You let us know where it came from. We will book it that way. And now you've done something that you could never do before. You stay in their plan, you get all those employer matches and all the new contributions, but you're not stuck in their investments. And there's no tax implication. There's no penalty. It's incredible. And I can't wait to see this effect, because, we got a big buzz going on with this. You have to understand that this is going to go away, and it's probably never going to happen again. So we're looking for good things that are coming out of this. And this is an incredible opportunity. Yeah, absolutely.
Glenn, I know we are just about our time for the discussion today, but as we kind of alluded to that, we should kind of have a second discussion over some of the other aspects of the of all of this, So I'd appreciate and would like to invite you for another discussion at some point. But as we conclude this, please share with the listeners just more about your contact information and, how they can reach your company as well.
Well, you can kind of see this up here, right? NuView Trust. Those of you may be listening on in your car or something, it's NuView Trust, and we spell it NuV as in Victor, IEW, trust.com. And you can actually go there and you can click on our free guide. This is like 16 pages. So it's not a big treatise, but it's that expanded elevator conversation I was talking to you about. So you can kind of understand and hit the high points. Do not be intimidated by this. It's amazing, and it allows you to buy things on sale. The stock market only sells at retail price. You probably never pay retail price. I don't pay retail price on my investments. So it's just a way to supercharge your retirement. This is probably the one thing that the government gives you or allows you to do that's so unique. Everybody should be taking the full advantage, and that's by having all the choices possible.
Incredible. Thank you, Glenn. I appreciate it. And we here at premiumcashflow.com as well have lots of news articles, statistics, and of course the podcast where guests like you regularly come on and share their expertise. So viewers and listeners of the podcast can certainly reach us from the website. If you are interested into investing into various opportunities, we definitely have opportunities on a pretty much on a monthly basis these days. And as we are speaking, there are more than different ways of how you can invest. We can certainly share and educate you on all of those opportunities. And we absolutely leave the decision and independence to you to verify, vet, and make your own decisions. So more power to you. Thank you, Glenn, for coming on. We will certainly be talking more on another episode as well. So thank you for your time today.
Sakar, it was a delight. Thank you.
Thank you.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.